Hi, I'm Peter Slayton, Forbes financial columnist, and I'm here today with Mark Niemeyer. He's the president and CEO of Cole Real Estate. Mark, tell us a little bit about Cole.
So Cole has been in business for over 30 years, and we're a real estate investment management firm that focuses on the credit net lease sector of the commercial real estate market, and have approximately $10 billion of assets under management.
Why do you focus on that sector? What is it about credit net lease, and can you define that a little bit for our audience?
Right. So what we're really focused on is making the asset class available to the investing public. The investing public is largely underallocated to commercial real estate, and yet we see that there's significant demand out there for what commercial real estate can do in the way that we invest in it. And the demand is really coming from investors seeking income, but also seeking stability and diversification within their investment portfolios. And so, our business model of focusing on high credit quality corporate tenants on long-term net leases across the retail, office, and industrial sectors, we think is a very stable investing strategy that can bring commercial real estate to investors in the way that they're seeking income and diversification without significant risk or volatility.
Credit net lease implies that this is a high-quality tenant. They're going to be in fairly expensive properties. Is that the case with the assets you buy?
Well, the assets that we buy have maintained their value better than other asset types out there because there is this flight to quality going on in the marketplace. With the displacement of capital and some of the disruption in the markets that we've seen, lenders pulling back, it's still been a very opportune time to even acquire these types of assets. So we feel that you get the best of both worlds. You get the stability of the steady income stream over a long period of time without taking on significant risk, but you still have the opportunity for some upside and some appreciation, because we think in our case, we're buying assets at a very good time in the market, and what we've bought over the last couple of years, we think has appreciated as we've been buying this property type.
Are you moving to address some of the concerns to allay the fears that investors might have about the liquidity of their investment?
Well, we absolutely are, and in the case of listed REITs, you have the stock market valuing the real estate on a daily basis.
Yes, very, very significantly changing every day. It's
right.
Fun to watch, but not necessarily good for the stomach.
Exactly, and we don't think that the stock market is the most appropriate way to value real estate, but we also think that one of the challenges of the current non-listed REIT space is that products aren't marked to market on a regular basis. Right. They're required to mark to market 18 months after the close of the offering. And as an industry leader, we've been trying to move in the direction of more frequent valuations, not overly frequent valuations. Again, we don't think real estate needs to be valued on the second by the stock market. That's an unnatural act for real estate. But we do think that more frequent valuations would be good, so that there's greater distinctions that could be made between the highest quality portfolios like we think we assemble and portfolios that aren't performing as well.
Are you expecting to roll out any kind of new product in the near future, or is that something you can't discuss?
So we're working on new product designs and new wrappers that are designed to bring the asset class available to a wider array of financial advisors and investors. And so products that will have different load structures and more regular valuation, as well as greater liquidity on an interim basis.
Okay, well, finally, why don't you just tell me what your most recent acquisition was, if you have it at your fingertips?
Well, that's a great question. I mean, we're acquiring properties at a very rapid pace, but probably one that stands out in my mind is that we acquired the corporate headquarters of the Apollo Group, which is based in our backyard in Phoenix, Arizona. Beautiful corporate campus there, and the Apollo Group is the parent company to the University of Phoenix, the leading for-profit education corporation in the country.
Great. Well, thank you very much, Mark Niemeyer.
Thank you very much, Peter. Appreciate it.
Take care.